We are 3.5 hours into trading. It is Wednesday, July 14th. Hello, traders. Let's start with yesterday's picks. That's how I like to start each one of these videos off. I want you to see how successful my picks are day in and day out. I'm only going back one day because I've been telling you this is not a great swing trading environment. You want to day trade. So many day trading opportunities. My God, I can't justify taking an overnight position with the market at an all-time high on light volume, especially not when we're seeing sector rotation and intraday opportunities like we have right now. Yesterday, TSM was going to be my long of the day, but I changed my mind. It held up really well. You can see how this is where the video came out. Stock did make a move higher, but it eventually gave in to market selling pressure. So if you saw this selling pressure come in, draw your upward sloping trend line. You've got to exit the trade right here. Let the market do what it's going to do, and you can see the market finished on a low note. Stock still was able to finish higher on the day. Today, when the market gapped higher, boom, out of the gate, very, very strong. So it's a nice pick. I like it. Go into the daily chart. You can see this horizontal breakout right here. Stock looks good. It's trading higher on the day right now, even though the market is lower than its open. Market is up a little bit from yesterday. We're going to talk extensively about the market. I'm going to show you the other pick that I had as my pick of the day yesterday. It was MasterCard. Love that strength. Love that breakout. You can see the strength on a 5-minute chart. This is why I made it my pick of the day. It was continuing to surge higher. Very, very nice, tight trading pattern. This tells me the buyers are lined up. Now, it did fall with the market yesterday. So again, when you've got these upward sloping trend lines that are breached, you got to take profits and get out. But look what the stock did today. As soon as the market had a decent bid this morning, it exploded higher, and it's been able to preserve most of those gains. MA was my pick of the day yesterday. I still like it. I think it's going to continue to perform well. How is it that we can find these stocks? I'm going to show you why I'm focusing on day trading. I'm going to show you the setups that I was looking at today, and then you'll get a feel for how the market comes into play and how the market dictates everything that we do. Along the course of the day, we pick up pieces of information, and there are key trading bars. Those key bars tell us exactly what we need to be doing. Yesterday, I pointed out this was a key bar. This told me, as the market was challenging the all-time high, that there was heavy selling pressure. You are not normally going to see a long red bar like that when buyers are lined up, because as soon as the sellers come in, the bids are so strong that the market never retraces like that. But we did recover. We are in a bull market rally, and once we got to the high, we had a double top formation. Now, you've got this support right in here and this compression. You had a bearish 10P cross. So as soon as we broke down, this is where you would want to be shorting. I did not short there. I shorted here because I wanted to see if this was a one-off bar, meaning a one and done, and then we grind higher and retrace, or would we be able to preserve all of those losses and stay right there? Once I saw that there was no retracement into this red bar, I knew it was time to short, and the market dropped. Today we also had a key bar. I've been mentioning in my pre-open market comments, so let's take a look at the pre-open market comments that I posted today, and then you'll be able to know that I'm not just full of bluster. These are actually things that I'm pointing out. These are my pre-open market comments. I speak specifically to day traders and swing traders. Here's the takeaway from today's comments. I will be looking for shorting opportunities in this sector. One thing that I'd be looking for out of the gate is if the market tests the high, the all-time high, and then fails right away. If it's able to go up and test the high, preserve those gains, and then move higher, then I'll be looking to buy tech stocks because the tech sector is very strong pre-open. But if the market runs up to the high and it fails, I'm going to be looking for shorting opportunities. Why? Because this is a gap up to a new all-time high. And you can see we gapped up, we made a new all-time high this morning. These are the key bars. Tail above body, wham. tail above body, wham. Okay, nothing too damaging so far. We're still preserving the halfway point of this long green candle. This was the key bar. The fourth bar of the day was a key bar, and I mentioned it to members. We took out the low of the day in one bar. This told me that we were going to be filling in this gap. Now, along the way, on the way down, I was short in here. I covered my short here. We had this nice rally. It's only 2 bars. Here's the other thing that I had mentioned to members. Proprietary trading firms, ooh, we're getting a little bit of a sell-off here, so let's watch that. We've got a bearish 10P cross, upward sloping trend line here, violated to the downside. This looks like it's going to be a decent bearish opportunity. So this cross right here, this is where you'd want to be long on a bullish cross right here. Okay, right here is where we get the bullish cross. Not here, not here, not here. Before it even started to happen, we get a bullish cross right in here, and I'll show you how I traded it. Here, we get a bearish cross. Let's put the crosshair up so you can see where it comes into play. Right there. Not here, not here, not here. Up here. It is a predictive indicator. Very, very accurate. Anyway, let's go back into the market analysis and let me show you about these key bars and how I traded this. So here, I took gains because this had been a choppy move down. Sell, 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 bounce. Sell, 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 bounce. Well, I didn't want to wait for the bounce. I wanted to get out of the way because the market has been moving higher. That tells me that shorting the market is a tough proposition because you get these huge bounces like this. So now we get 2 green bars, and I want to talk a little bit about trend lines. So if you draw this downward sloping trend line, this long green candle pokes through the upper end of that downward sloping trend line. Aha! Buy, buy, buy. Time to buy. We have a breakout to the upside. No, not so fast, because proprietary trading firms, they know that that's how you are going to act, and they automatically, programmatically are able to draw these trend lines. And if we poke above it, that trend line is going to be violated when traders have drawn this trend line, and that's where they're going to be looking to buy on the notion that the market's going to continue to move higher. So if you're short in here, you're going to cover because now we're through the downward sloping trend line. And if you're looking to buy, you're going to be buying. Well, if you only have a 2-bar breakout, you want to be very careful of those. You want to be very careful of a 1-bar breakout. Like if that were just a 1-bar, you would not want to cover your short positions. You'd want to make sure that there was follow through. Well, there was, so you'd be out of the trade. But in any event, right here, that was just a head fake. So now institutions are back in there shorting. Now you have a new downward sloping trend line. And then the selling pressure starts to accelerate, and we get this long red bar right in here. You should have also been aware that Jerome Powell is testifying before Congress. I suspect that that might have sparked some selling pressure. PPI today came out at 1%. Unbelievably hot. We had CPI come out at 0.9% yesterday. Incredibly hot. This is going to impact interest rates. So we're going to start seeing some pressure on bonds, and we're going to see upward pressure on interest rates. That's not particularly good for the market. So in any event, we get this huge market drop in here. We get the bullish 10P cross, and we get tiny little candles in here. Everybody wants to trade the S&P 500, and I did trade the S&P 500 on the way down here, but I was taking profits before I started to see long green candles like this, because I know that the snapback rallies can be extremely violent when you have a bullish market like we're in right now. Take a look at the daily chart, and you can see how bullish the price action has been recently. So I know that I have to be super cautious on the short side, so I'm taking profits on this weakness. When we get these big rallies, I'm looking to reload. So in any event, down here at the bottom, am I looking to buy S&P futures? No, I am not. There's no edge in trading the S&P 500, which, by the way, did I short S&P futures right out of the gate? No, I did not. Instead, what I did was I looked for stocks with relative weakness. And I'm going to show you a couple of stocks that I posted right away this morning that were weak. And I don't know if I'll be able to find it in the chat room, but I want to show you. So as we start getting into trading, this is about 20 minutes in, and I'm starting to show BAC. That's going to be a nice short. I'm just going to continue to scroll down. Short TSN. That was a nice little short. So I'm already focused on the short side. Why? Because I've shown you that the fourth bar was bearish. BYND, very nice short by one of our members. So I'm already looking for shorts early in the day, and I'm just going to cut to the quick. I shorted MS. That ended up being a very nice short as well. And then I was just riding those shorts and trading the S&P 500. I'm going to fast forward because we start getting into the market selling off hard, taking profits, and now I'm starting to shift gears and I'm looking for a market bounce. And I'm going to show you the market bounce that I played and exactly how that trade set up. I'm also providing members here with a lesson, and I'm showing them why this downward sloping trend line, just like I showed you, was a head fake. This was not a buy. You did not want to get long in there. That's where institutions were looking to shake shorts out, and that's where they were looking to reshort. So as we continue to come down, I'm going to go down and show you a couple of stocks that I like. I did short CLF on the way down, incidentally. And now we start getting into the point where the market is starting to look very, very good. I'd mentioned LULU as an excellent stock with great relative strength, and that I was going to be watching it and waiting for that market low to be in. And then that would be a stock that I was looking to jump on. And DIDI was another one that I had looked at. So I can't really find it, but I know that it's in here. There we go. LULU, good. So this is at 10:58 Central Time, so almost 11 o'clock. And it's right at the low. And I had mentioned I'm starting to buy LULU and I'm starting to buy DIDI. And there I'm already getting out a part of my position in it. So I'm sorry I can't find the exact post in here, and I don't want to delay anymore. Just know that I was looking to get long and did get long in here. So let's take a look at that trade and why it set up. How did I know that that was going to be a good play? So here's the clue for Lulu, and we have a 10 SI indicator that shows us relative strength, and I'm going to put that up, and you can see how the stock right out of the gate was very, very strong. Not only did I like it on a day trading basis, look at that breakout on a swing trading basis. On a daily chart, that stock is moving through horizontal resistance, strong. Apparel stocks today, very, very strong. And as the market is selling off, there's the opening and the S&P 500 fell. What did the stock do? Up, up, up. Well, I know that the market is going to continue to drop, so I'm just waiting for LULU to finally cave in. And it does right in here. But look, let's put the crosshair up. Look what it does right in here. It has found support right here. And look at what the market did after that. Down, 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 hard. Up, up, up. Buyers can't get enough. They can't get enough Lululemon. They don't care that the market's falling apart. They want in. They want to buy as many shares as they can. So I knew that when the market was starting to pull in a low here, we had a bullish 10P cross. We had smaller little candles in here. You see how the body of this candle is smaller and smaller? This is where I started to scale in. And I told members right in here, I'm buying DIDI and I'm buying LULU. So I did buy some LULU. I believe that they were the 380 calls, and I bought them right in here. And look at those gains. The stock went up about $5. I was able to make approximately 50% on those calls in a matter of about an hour. That's how we do this. And look at that bearish 1OP cross right in here. Just before I came on, one of our members was talking about how he was looking to get in on a stock. And I'm going to try and find that post because this is not just about me. This is about everyone. Everyone is coming in. They've learned the system. They understand how to trade it. And I'm going to go in and take a look because the stock was, yes, RBLX was good. And I'm continuing to scroll down here. Again, it's super important that you know that this is happening real time. This is not a bunch of BS. These are actual traders in here doing this every single day, and they've learned the system. You can learn it too. This is something that you can replicate. I can't find the post right now, but Richard, you is the one that was looking at RBLX. You can see how he took some profit right there. There was another stock, I believe it was UWPK, something along those lines, but we're going to take a look at those two stocks right now, and you're going to see why those were excellent plays. I'm going to go into a search called Relative Week 30. So as the market is going up, 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 we are looking for stocks just like Lulu. When the market was going down, it was going up. We are looking for stocks when the market is going up that are going down. And so one of those stocks, maybe Roku will work, but I know RBLX was one of those stocks because that's one that he was shorting. And look, you can see, even when the market was going up, the stock was going down. As soon as the market rolled over, blam, it fell apart. That's the type of price action that we want to see. TSN is a short that I took earlier today, so let's take a look at how that's set up. You can see market was up, stock was ticking lower, took out the prior day's low. I was short in here. See ya. Covered my short in here. That was a very nice trade. CLF had some temporary weakness right in here. You could see market was starting to fall apart. Had my alert set, took out the low of the day. Beautiful drop right there. I'm going to take off that SPY overlay to so that the chart is not as obscured. And we're going to take a look at the market. Market first, market first, market first. It is the most critical component of your trading. And as you watch the market all day long, you need to pick up certain clues along the way. Yes, the 1OP indicator is critically important. It's all I use to trade the market. But here are other clues that you're watching for. Smaller bodied candles, big engulfing candles that break down here to a new low of the day. Bullish hammers, bearish hammers, these are all important. When we get this rally here, this is a very strong rally. Two nice long green candles with follow through. Well, that tells me that this low of the day is probably going to be preserved. Why? Why? Let's say that you're short. Let's say you start getting short in here. You take out the prior day's low. Everything is looking good. Blam! You get blindsided and you get this kind of rally. If you're a short seller, you're going to be devastated because everything was looking so good in here, and now all of a sudden it turned to crap and you're having to cover and take a loss. Even if you don't cover in here and you're still bearish, by this point you're like, oh my God, oh, I can't take it anymore. By this bar, you're ready to throw in the towel. You've already thrown in the towel. Oh my God, I'm done for the day. I can't take this anymore. That's the mentality. That's what you go through. But if you had been patient, you know that the market's been in a strong uptrend. You've got to take profits on your shorts early. Don't wait for that low. You're taking profits in here. You're waiting for the bounce. Now you see these tiny little candles in here. Okay, still not time to short. Okay, there's the first red candle, but it's a bullish hammer. Things are starting to soften up a little bit. So you saw buyers in here. That was the low. That was the low. They ran it up, ran it up. But now all of a sudden you get this red bar in here. Ah, we have an upward sloping trend line that's been breached. Okay, now I got at least something to hang my hat on for this bearish cross right in here, and I should probably start looking for some shorts. In the back of your mind, you should also be telling yourself, I'm trading against the longer term uptrend in the market, so I've got to be very passive with my shorts. The better ploy, if you're a long only trader, meaning you only buy, is wait for this to come in. Wait for support above that low. Wait for the bullish 1OP cross. Wait for a nice little drop that turns into a bullish hammer. Wait for a drop that has a bullish engulfing candle right after it. Wait for a drop like this and wait for one of these candles. Make sure that you've got follow through. Now you want to start loading up and buying stocks with relative strength. This is a long video. I'm trying to teach you how to day trade. The beauty of this is that it doesn't just work for day trading. This works for swing trading as well. And that's why you see the stocks that I post every day, they follow through the next day and the next day. It's because we have all the ingredients for that stock to move higher. So now what do we have? We have 30 minutes of market selling. We have a strong market uptrend that we would like to join. So let's look for some bullish stocks. We're going to go into day trading search. We're going to go into relative strength 30. Now, the one thing right away that I don't like is all of these stocks are losers today. They're red. They're down on the day. So I'm already not very excited about this list of prospects. I could click through them and these stocks will all have relative strength and I could point out that relative strength to you. I want stocks that are powering higher, not stocks that are bouncing off of a low. So I don't like any of them. But yes, they all have relative strength. We're going to go into heavy buying. This is where we're going to find our gold. LU. Let's just flip through the list and let's take a look. LU. That's probably going to be my long of the day. I don't even know what my long of the day is going to be. mRNA could easily be my long of the day, but you've already seen me highlight this previously in the last week or so. I love this stock. That was a key bar right there. That gigantic bullish engulfing candle that engulfed that bearish candle right there. That told you the stock was going to go higher. So in any event, I'm not going to use either of those two. We're going to keep looking and see what we've got. Kind of like Netflix. Here's what I don't like about Netflix. Look at all of this chop. I hate stocks like this. I hate them. Two green bars. Oh, here we go. Looks nice. Yeah, everything's great through the downward sloping trend line. Boom. No. So I don't like Netflix for that reason. I'm not going to trade Netflix. MA, you know I like that one. Visa, look at that beauty. Same as MA, so I'm not going to use it. Why? Because I'm showing you MasterCard. I don't want to do Visa and MasterCard, but Visa looks really good. Let's take a look at that one. Nice strength, holding up close to the high of the day. Now all we have to do is we have to park on this stock and just watch it and wait. That's why I call this Option Stalker. I don't call this option run around with your head cut off. We are stalking these stocks and we're waiting right by the watering hole for things to set up. Now look at this. We've got a really deep 1OP cross coming up here. This should be pretty good. We'll be looking at this downward sloping trend line right here on the S&P 500. And then when it's broken to the upside and we see a bullish hammer, a bullish engulfing pattern, plus we've got this bullish 1OP cross, then we're going to know it's time to strike on a stock like Visa, Apple. Nice big gap up, holding all the gains. Had a nice little bounce off of the low in here. It's giving back some. So I'm not super crazy about Apple. Put up the D1 chart. Nice big breakout. But here's why I don't like Apple. It's made such a huge run. I just don't want to chase stocks right now. So I'm going to keep looking. Not bad, but I'd like to see this candle continue to be green and not give up that breakout. So no, SWKS does not qualify. Qualcomm normally would have. It's able to hold this little breakout here, but I don't like this bearish hammer right here. Not a good pattern for me. Pepsi, pretty nice. Not too far out of the gate here. It's been in a long-term compression. Pepsi has a nice head of steam. Could be my long of the day. Draw your downward sloping trend line here. Wait for the market. Yes, Pepsi could be a nice one. It's not a fast mover. It's not a sexy stock. WFC, Wells Fargo, earnings before the open. Had to be some news in here. Look at that volume. Oh, baby. You can see the volume right there. This stock looks like it wants to continue to move higher. And you've got a downward sloping trend line coming into play right about at that 50-day moving average. So if Wells Fargo can get above that 50-day moving average, I think it may be a decent swing trade. LEVI, traded that today. Nice. Got a little breakout right in here. Excellent relative strength today. I'm still looking. TJX, able to get through this, but very choppy in the past. So that kind of keeps it off my list. I'm hunting for something that looks really good. Coca-Cola, probably rallying in sympathy with Pepsi. I'm going to keep looking. So I'm going to go into Pot Bull. Let's see what's going on in Pot Bull. Some of my favorites right in there. mRNA, LEVI. Let's take a look at this stock and see what it's doing. It is right on that high of the day. This is another stock that you can buy as soon as the market finds support, which we're getting some tails under body. Don't quite have our 1OP cross yet. Yes, this is the kind of stock that you could buy and day trade very easily. Take a look at the daily chart. Not bad. Upward sloping trend line through the 50-day moving average. Got earnings coming up 27th, so we've got some time on this. Not bad. Decent mover. On something like this that doesn't make strong, powerful upward moves, I'd probably be more inclined to sell it out of the money bullish put spread, keying off of that support right around the $200 price level. could be my pick of the day. Let's see what else we've got. I think it's going to be. It's nice. This is not a super sexy stock. It's not something that's going to be up 50% overnight. It's just going to be a nice grinder, but it has excellent strength. It's got nice support in here. It's breaking out technically. So yeah, I like MMM. Let's look at that 5-minute chart. And you can see market's starting to recover. Here's the tell. Red bar, green bar. Green, green, green. So when you saw these two red bars, you can see these two green bars already. Got a bullish flag formation. It's a good tell that the stock is going to go higher. So I like MMM, but I would not buy the stock. I would opt to sell it out of the money bullish put spread that expires before earnings. I think MMM is going to be my pick of the day. Take one more look at Lululemon. I do really like this breakout. Zoom out, take a look at that longer term chart, and you can see there's a downward sloping trend line here that's been breached to the upside. Crosshair tool, you can see the stock is trying to get through that resistance, so it's going to have some resistance in the way. We're going to go with MMM. The main point today was to really nail home a couple of things. Number one, I view this as a low probability swing trading environment until we get a couple of really hard days of selling or perhaps a week of selling. Why do I feel that way? The market's getting overextended. We're up near the upper trend line here. Every time that we've been up on that trend line, we've seen a market decline. If I go into a really long-term chart, you can see that from here, I can draw that upward sloping trend line, and SPY 440 is about where that comes into play right up here. We're getting close to it. And so I think that the market's going to struggle to advance. We've got earnings season coming up that typically keeps buyers engaged. So I'm not looking for a big drop immediately, but I think that it looms. And I don't like the hot inflation numbers that we've gotten out of CPI and PPI. I think they could weigh on profits. I think that supply disruptions could weigh on profits. So I don't like swing trading in here. I like day trading in here. If you've got big profits on a stock like Lulu and you take partial profits into the close and you want to leave some on overnight, great. Stock moves higher tomorrow morning, take the rest of your gains. Very, very short-term swing trading, if at all. Most of my trading right now is day trading. I think these picks are going to perform well. So be very careful. I view this as a low probability trading environment. And then the second thing I really wanted to drive home was how market first, market first, market first. It dictates all of our trading. You've got to watch for all of the keys, the key bars within the market through the course of the day. And when you start to see that a reversal could be pending, you don't trade the S&P 500. You look for stocks, in this case, with relative strength, and you buy those stocks because they are going to move better than the market. And if you're wrong and the market continues to go down, those stocks will continue to inch higher and you can break even on them or scratch the trade and get out of it. But if you're trading futures and you were wrong that was not the low and it goes down, you're going to lose money on that long position. There's such a huge edge to trading stocks. I hope for any of you who have been convinced that you want to trade the S&P 500, I hope that these videos help to show you that there is a much, much better way. So still do your analysis on the market, still track the S&P 500, but don't trade the futures. Trade stocks with relative strength or relative weakness as a surrogate market position. That's all I've got for you today. I think I'm going to lose my voice. Hope you've learned a lot. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.